My name is Nick B, and let's get into this week's futures overview. So it's going to be an interesting week. Election week. Monday, we don't have much happening. Tuesday is ISM Services PMI at 10 a.m., and then the presidential election all day. Wednesday, final services PMI, crude oil inventories into 10 a.m., 10:30, and then we have the 30-year bond auction. Oh, on Tuesday, we also have the 10-year bond auction at 1 p.m. Thursday, unemployment claims at 8:30 a.m. Pretty quiet. Then we have 2 p.m. on Thursday EST, the FOMC statement. The expectation is a 25 basis point cut. Let's see what we get. Friday, consumer sentiment and inflation expectations. All right, so it's going to be definitely an interesting week, but as always, we're just looking at the text. Where are we? What are we doing? And why? So let me clear this up and I'll keep it simple and brief because it's a little bit repetitive what I've been kind of going over the last few weeks. Now, we're going to revert to last week's levels and the floor that we are in. Currently, the new high that we made on ES 59.27. Right away, I got to plot that off. And then we fail to hold up 5,800 as a psychological support. And the extent of this move to the upside stems from price creating a base over at 57.20. And if you retrace a little bit more to the left, you'll see that 57.20 happened to be our July all-time highs on ES. So this is a beautiful little corridor. We're in between, and it's tough to navigate through it because unless we get the breakout or breakdown, we don't really have real direction here yet. On the daily, I'm taking note that my 20-day EMA is at 58.22. That is the midpoint, very important. If and when ES gets above 58.22, I say that's a green light to come all the way back up to 5,900 at the minimum and then target 59.30. A break of 59.30 on ES and 59.50 would be an ideal target to the upside. That would be a nice midpoint above 59.50, 59.60, 59.80, and 6,000 really is not that far away. Now, if we end up breaking below our July all-time highs of 57.20, yes, that could mean a little more downside. This is a rollover gap here. Maybe price wants to come down and checks 56.40. That's rough. It's a possibility because we saw kind of a sell-off we got last week, so I'll keep that on the table. That possibly is if we fail to hold, I would say 5700 as that psychological support, you kind of have a green light down towards 5650 at best. And then if we want to fill the gap at 5640, sure. Below 5640, I would say that's where it gets a little scary because you have 5600 as a psychological level. And again, there's nothing here in between until at least 5400, 5410. That's steep. That's rough. All right, we're not done though. We can navigate the in-between levels here. I was messing around and something to save time. Oops. And what I found pretty interesting was I figured if the base is from 5722 stemming up to 5927, I wanted to know, can I place a Fibonacci retracement and what kind of a support resistance is it going to give me? So I took it from 57.22 to the highs of 59.27. And you could see when we started to retrace down 38.2, 50, 61.8, we broke them down perfectly. We got, well, initially we came down to 61.8, but when we failed to hold 58.80, got down to 58.50, down to 58.25, down to 5800. And once that broke down, you could see we tried to bounce off of it, couldn't, absolutely flushed, came down to 57.20, which were 57.30, excuse me, and try to retake 5800 as that psychological resistance. Could not do it. Back down, we went 57.66. So if we end up breaking below 57.20, which were those July highs, again, this helps me confirm that below 5700, I mean, you're going lower. You're probably coming down to 5680, and I wouldn't necessarily try to catch a falling knife. I would much rather wait for confirmations to the upside. And again, we mentioned this before. Once the fib completes a certain set through its levels, we can't really rely on it anymore. But here's something really interesting I noticed too. I'm going to keep this fib up here for now, and I'm going to trace up a new one where I figured if those were the highs and if we were really, if we want to bounce this week, I could potentially use the support at 57.30 as the baseline support. And then I took a fib from the highs down to 57.32. Let me edit it so we have some contrast. And notice how close these fib levels are, 38.2, 50, 61.8, to the ones where we ultimately stemmed from the downside to make these new highs. And I figured 38.2 we have at 58.06, then we have 58.30, then we have 58.52. These levels are perfect from what we played out from this base support to the upside. So if the opportunity arises and I see fit, 58.10 could be along with a 5800 stop. Your first target is definitely 58.20 to 58.30. If ES can get above 58.30, you will see 58.50. Above 58.50, 58.80, 5900, back up to the highs we go. But this only is valid as long as we hold a base of 57.30. Again, if we break below this down to 57.20, July previous all-time highs, and 5700 breaks, we can't hold it, fine, down we go, 5600, 5650, 5640 to that rollover gap, and then down to 5600 we head. Same thing we're going to do more or less with NQ right now, just to save time. So pull this up on the daily. Again, similar to ES, we made, oops, let me draw out the floor. So we made new highs at 20,790, and the base of the push towards 20,790 was 19,800. Okay, so if and when we get above 20,790, we're going to 800, 850, 900. Ultimately, get me back above July's all-time highs. 21,000, 21,250 is going to be on the table to the upside. Now, if we end up breaking below 20,000, which we held quite well last week, if we end up breaking below it, it's definitely going to expose us down to 19,009. But again, my focus is on this base support of 19,800. Below 19,800, I mean, you got nothing until 19,620 as this higher low. Lines up pretty close to the 100-day EMA on the daily as well. So that's an important level there. Below 19,600, 620, I mean, you're coming down to 19.5, and then below 19.5, you have no support until really 19,000 and lower. Could that happen? Maybe. Will it? I want to say no. I want to say no, it won't. Similar to ES, also, something I forgot to go over on the daily, really quick. We pointed out that the 20-day EMA is at 58.22. So when we identified the fibs here to save time, 58.22 as the daily 20 EMA lines up perfectly to my 50% retracement on from the all-time highs down to this low of 57.30. What that tells me is if and when we get at least a 1 hour candle close above 58.22, I can go long even at 58.30 with a tight 10-15 point stop, and ideally my next target is going to be 58.50. If I can get that continuation above 58.50, 58.80 and 5900 are just around the corner. So similarly, that 20-day EMA on the daily we can apply as the confirmation level. So for us right now, it's at 20,320, telling me that if at any point or when price, especially on the daily, can close above 20,330, 320, we will see a possible bounce towards the highs again, the previous session all-time highs, because again, there's nothing really here in between. I mean, you have a midpoint of 20,500, but that's something the fib is going to help us break down between the floors. Again, the big picture direction, get us back above 2790. We're gonna see 21,000, 21,250, and so on. Get me below 19,800. We might go for the area of where our rollover happened into this quarter. Let's go ahead and pull this up on the 4-hour now. Alrighty, so let's take out the fib really quick. And stemming from 19,800 up to 20,790, we had these levels 38 point, 61.8, 50, and the 38.2. From the highs, we broke down to 38.2 perfectly. It's at 20,420. The 50% is at 20,300, and then the 61.8 is at 20,190. Right away, I have an idea of what are some key levels that we need to see before we go higher, and that would be 20,200, 20,300, 20,400, up to 20,550. But again, we've already completed the sequence to the downside through these levels. I can keep it up for just for reference here really quick. I'll take it off so I know it's a little messy, but I'll take the fib from the current highs down to what our support was last week, 20,008. And let me bring up some contrast. Look how close they line up to where our fib levels were stemming to the upside. So if we want to see this upside, a perfect guide would be the 38.2% retracement, which is at 20,308, the 50% retracement at 20,400, and the 61.8 retracement at 20,500. Now, I mentioned all of these levels based on the upside. I just rounded them up because it makes sense. This is still a floor. This is a chop range. So if we want to bounce, we have to hold a support of 20,008. And then we can go long at 20,000. Well, 200 is a little premature. Remember, 20,320 was our daily 20 EMA. So maybe a bite at 20,300 would be a little more enticing towards 20,400. Then 20,400 breaks. We got room to 20,005. That seems like the clean ride up. Above 20,500, we're going to run into 20,550 to 600. Get me above, well, 626 is only the 78.6% fib. There's really nothing there. I would say ultimately last call for upside is going to be 20,500. Once, if and when price can clear that level, I mean, it's only going to be a matter of time until we see 20,790. Now, this has to be the floor, 20,008, if we want to see this upside come to fruition. If at any point into this week we break below specifically 20,000, more specifically on the 1 hour, if the 1 hour candle can close below 20,000, I mean, it's game time. We're coming down to 20,000, 19,950, 19,900, and then ultimately the target to the downside is 19,820 to 800. And that's all she wrote in terms of just price action, just looking at it for what it is. Let me see, the VIX, 2208. All right, that's fine. The dollar, we need the dollar to come down, and after this election cycle, after those rate cuts, it will. That's going to help us get a boost in asset prices, and we'll go from there. One name I've been looking at, because if this all starts playing out like we're hoping to the upside, um, just for funsies, I have AMC, and I want to go ahead and say that if at any point, whether it's into November or into next year, we have that window of about 8 months to a year to hit a nice lick off of this name. If at any point it gets back above $6, it's going to go to 7, then 8, and once that begins, it's only a matter of time before FOMO and MOMO start circulating this name, and maybe it might be a worthwhile play. I personally have some AMC shares that I've held from $5 a share when it spiked up overnight to 11.88, and I'm still holding on to it personally. This is a funsies name, a YOLO name, if you will, into kind of 2025. But other than that, in terms of text, that's all I see here. Let's see if this week will be the deciding factor of us breaking above 2790, or if we end up below 19.8. I'm sure the election's going to help spice up the price action. With that said, have a great trading week ahead. and we'll catch you on the next one. Cheers.